Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Happy Memorial Day to you.
Yes, sir. Same to you.
This is a wonderful day to celebrate our fallen soldiers that have put their life on the line for our freedom. And we live in the best country there ever was. No matter what side of the fence you're sitting on, you still live in the best country, and you should be doggone proud of where you live. And I
Absolutely.
salute you for fighting for our country. You were in the Navy, and I appreciate what you do, and all of the folks out there that may be watching this. Memorial Day used to be called, I think it was Decoration Day. And
I think you're right.
and they used to decorate the cemeteries of the veterans, and it didn't get actually established until 1971
Wow.
by the government. Yes, and it is now the fourth Monday in May. Yeah, what a great way to celebrate and really give honor to all the people that have really put themselves and their families on the line, because we have to remember our military, they got families that are affected by everything that they do. And you and I know that very well, but it's a good time to give recognition to all of those that have fallen for us before us, because this is an amazing country. It really is.
Absolutely.
So
I couldn't agree more.
having said that, I want to talk to you a little bit about the 21st Century Housing Act. You know what? I don't hear anything in the news about this, and it's
Oh,
actually could be a big deal. And a lot of folks that are even interested in knowing what's going on in real estate, and I think half the realtors and mortgage people out there have no clue as to really what's happening in this world. They're just going through the motions. But you and I are inquisitive, and we want to make sure that we're giving our clients up to date, relevant information that could impact their lives. And the 21st Century Housing Act could absolutely impact a lot of lives. So,
it
talk to
can.
me.
It can.
Yeah, let's talk a little bit about that.
Yeah, it's interesting because obviously one of the major talking points across both sides of the aisle these days is affordability, right? And it's
Right.
affordability of everything, but specifically housing, right? Housing and fuel and those kind of things are the basis of the entire economy, and it is tough, man. It's no holding back. It's tough for some young people to get into homes.
I know that it is, but I really get tired of hearing about it. And I'm not being unsympathetic to them, believe me. But listen to this. In 1971, when Memorial Day was enacted, do you know what the average household income was?
It was
Household,
under 10 grand.
$10,600.
Oh,
The
yeah, I
average
was close.
house was between $26,000 and $35,000.
Okay,
Average,
so
and
well,
your rent was $550.
let's put that into perspective. Today, the median income is household is about 75,000, give or take, and the median house is 400,000. So it's
Correct.
quite a bit more, right? And so there's a real problem there. Where I go off on people a little bit is, okay, there's a problem. How do we address it? And too many people have the simple solution of give me more, right? No, that's not how it works. But there's ways to solve it, right? There's things that we can do. And
There's absolutely ways to solve it. And I don't think we can discredit the situation, because
that's what I mean.
affordability is a challenge. But I'm going to tell you this much. It was a doggone challenge for me when I bought my first house too. I had to
Sure,
borrow
yeah,
$7,000 from an uncle in
same,
Canada to buy my
same here.
first house that was 107 grand. Right.
Yeah,
So it's never been easy, in my opinion, but I think
correct.
the media has made it even worse, because they're telling people you can't buy right now. It's not affordable. It's not attainable. And to be honest with you, it's always been a struggle. And I think
Mhm.
it's still a struggle. But if you want to be a homeowner, then you should be a homeowner, because that same home that you would have bought in 19, even if you went back 30 years, let's just say 30 years to 1976, you would have bought a home. It would have increased 221%. Now that's an average of about 4% per year, but that's compounded interest. But if you would have stayed renting and the rent would have gone up at the same pace, you would have paid $500,000 in rent over the last 30 years.
Sure.
You'd have a $500,000 free and clear house over 30 years too.
Yeah, I think we all, you and I and a lot of people understand the benefit of being a homeowner, right? And we understand that there are challenges. We can agree on that, right?
Yes,
How
we
hard
can.
it is. And I think I think the media's big problem in this is that they decided that there needed to be a boogeyman, right? It's not, hey, this is a struggle. Let's figure out ways to help people. It's, oh no, there's a boogeyman and it's the problem. And I'll tell you who the boogeyman is that they decided incorrectly was corporate homeowners, right?
Yeah.
So these big companies coming in and buying all the homes. Now, first of all, in case anybody doesn't know, the only reason that all those big home buyers started doing this was because the government begged them to.
Begged them. When no one was buying houses after 2008 during the recession, foreclosures, short sales, deed in lieu of, everywhere, rampant.
Right.
And
so then they realized, hey, this is actually a decent business model. We can buy these things cheap.
They weren't even in that model, Blackstone.
No, they invented that freaking model, right? So that before then it was all mom and pop, 98% mom and pop, and it's still significantly mom and pop, by the way.
Yeah.
But so anyway, the media decided that corporate housing buyers, home buyers, are the only problem. And that's where everything goes awry, because that creates a villain and says, if you solve for the villain, that solves everything. And that
will not be a problem. First of all, I looked at this, and you and I have dived into this in the past, but at the end of the day, corporate housing is not that significant. There is a few pockets like Atlanta, I think maybe Jacksonville, something like that. They may have 10%, but which is high, but are they controlling it? I can tell you what I'm seeing right now. And I've had word from people that are doing REOs for America for Housing. I forget what it's called. And Blackstone. They're doing a lot of these owned, and they're listing them. And I said, why are these companies starting to peel off these properties right now? They were concerned that the government may enact in this 21st Century Act a rule that says you cannot own that many houses. It's controlling the market. It becomes a monopoly in the market.
It's in there.
And that could happen. It could happen.
No, it's in there.
I know, but what I'm saying is I know it's in there, but I don't see where corporate housing has really controlled the rent and the housing to much of an extent. Could they? They could. Have they? I haven't seen that.
Evidence has shown in those markets where they control a significant portion. You got to remember, 13% of the overall rental housing stock is significant enough.
It is significant.
It's significant enough to drive.
You can control the market at that.
And by the way, it's not so much that they control it against the rest of the market, because let's face it, right? So if 13% of the housing becomes a little bit more expensive, the rest of the people that own housing go, hey, I can raise mine too. So it doesn't do it because it forces them. There's a little bit of greed in there, right?
Everybody's going to follow suit. That would be just like if there's
a builder.
If a builder's on a house for $500,000, and I'm going to go, God, I'm in the same neighborhood.
I'm in the same neighborhood. I should get $500K too. Exactly. So that there's a little human nature in there. But so the two big things that these companies, so everybody knows that they went out and bought bought a bunch of properties during the 21, 22 timeframe, right? Tons.
Well, they were having builders build communities for them, actually.
Well, that's when that started. They started actually doing, so there's two different elements of that. There's them just buying properties from the builders, right? So the builders built too many houses, couldn't sell them fast enough, so they sold some inventory off to the big guys, right? That was one side. Then there was another side where these companies realized that they could actually build like a 300, 500 house community, all for rental, control the whole thing, keep their costs lower because it's all in one place, right?
Well, so and they got the builder to build 300 homes, in one
300 homes, and so they get a discount, blah, blah. They don't have to deal with all the weirdness of an old home and all that stuff. So they started going towards build to rent, right? So there's two things in this bill that impact these companies, right? Yes. And I don't want to make them out to be like they're not good guys or bad guys. It's just that they are what they are, right? So one is that they're only going to be allowed to own, that they can only own 350, right? They can't buy more. So if they already own 500, it doesn't say whether it's going to make them sell them or not. But if they own 350, they can't buy more.
So here's what I'm seeing happening. Now you can correct me if you think I'm wrong, but here's what I'm seeing happening. So you got these big companies like Blackstone, BlackRock, all that owned all these properties. Right now, what they've done is they've started other companies to split them up. So they took their inventory, but this is really genius too. Okay, so let's just say they have 10,000 homes and they went, "Oh, I can't have 10,000 homes. Okay, I can't have more than 350 homes." So they start these 300 other companies or 30 other companies, whatever it is, in a different name. And what they're doing is selling those properties to those other companies, but creating losses for themselves so they can have these giant tax benefits from it too.
That's an interesting reaction to everything that the government does has a reaction in the market, right? And so that's probably what they're gonna. That's the first thing I thought of, and
that's the first thing I'd do if I were them.
Yeah, I'm like,
thing I do, like, hey,
do
you
this.
know what? I've rented this house out. I've scraped my profits off it. Now I'm going to sell it to a sister company for a loss. I'm going to take a huge loss so I don't have to pay all these taxes on the gains that I had. I'll take a loss carryover, and by God, we'll wash it out. But that's the American way. And if you don't have a tax preparer to help you with stuff like that's why Americans get pissed off, because they go, these big companies aren't paying as much taxes. Listen, you have the same rules they do.
So so I got you on that, but let's realize that there's the people that are writing these rules, they know this as well. So there's a good chance that they're going to slip something in there one way or the other, allowing that or disallowing that.
Yeah.
So we got to watch that. That's a detail let's get into. But the other thing that when they started building these massive communities, right? Now you got to think like an investor for a moment. I know everybody wants to hate the investor and hate the builder and hate the companies owning this stuff.
It's a wrong thing to hate.
But they do. So, but here's the thing is, if I'm an investor, if I'm a pension fund, if I'm any kind of fund, right, and I'm investing my money into something, and that something has a return model, right? And it says, hey, if you give us X, we're going to do this, and we're going to create Y value for you over time, right? That's how investing works. That's how it
all works.
So these companies created this build to rent thing, and they come out and say, okay, we're going to have this 30-year model, 25-year model. I don't know what their models are, right? But they have a model that's lengthy, right? And they said, we're going to take this much money from you. We're going to manage this stuff over time, and you're going to get this kind of return. Suddenly, the government is deciding that they're going to have to force them to sell within 7 years.
They're changing the rules. They're moving the goalpost.
Force them to sell. So, which in and of itself is not a massive problem, because it should deter them from building it. The problem is deterring them from building it reduces rental stock. So rental stock is important. People are going to rent.
They got to dump that many houses. That could flood the market, and that can affect everybody else.
So, right. So now here you got these companies are going to they're building already 200, 300, 500 units at a time in a fully managed, think of it like an apartment complex, but they're homes, right?
Yep.
Exactly. It's basically what it is. And so the government was going to say, hey, you know what? That's great. Do that. And then at 7 years, you have to sell all of them. That's going to flood the market, drop prices, not just for those homes, but for everything in the whole surrounding area. Right. And so as an investor, as a realtor, if I'm showing somebody property nearby one of those, I'm going to say, listen, man, just so you know, 800 units are going to come up for sale in the next 2 years. And your prices are going to plummet $150,000, $200,000. Hope you're happy with that. Yeah. Right? That's going to be a tough conversation. Thankfully, they ripped that out of the legislation. They ripped it out. It's gone. Nothing's official yet because it's not signed, but that's been removed. That provision has been removed. So good thing.
That's a good thing. There's also some positive things that I want to talk about, not in this segment, but in future segments, about FHA, HUD relaxing some rules and guidelines on manufactured housing. So there's a lot of things that are in this hack.
The big one that I wanted to bring up to you that I think we need to talk about next week is this, because I don't really understand it. You can explain it to me, but $100,000 small dollar mortgage pilot program that they're talking about introducing. So help me out, man. Help me understand.
Well, first of all, you'd be hard pressed to get a house in Central Florida or even in Florida for $100,000. Could you do it? They may exist somewhere. I bet there'll be limitations on the type of property as well. But what happened is, when the Mortgage Reform Act happened after 2010, they were trying to hedge against and prevent predatory lending from lenders that were truly predatory. right? They were preying on people. They were switching numbers around at the closing table. And so that's why they came up with the 3-day rule that everything had to be out before the closing in 3 days. So there was no surprises. One of the things they did is they prohibited lenders from charging more than a certain amount. And it depends on the type of loan, but they're usually between 3 and 4% in loan cost. But they included title search fees and all that in there. So all of it had to be combined and couldn't be more than, say, 3 to 4%. That's fine on a $250,000 or $500,000 loan. That's easy to do. But you can't do it on an $80,000 loan, because if a lender's raw cost to do a mortgage is about $2,500, okay, everybody, it's about, that's no profit. That's just what it costs to put a loan through and close it, about $2,500 now.
Okay.
If a lender's got to make a profit of, say, $800 to $1,000, that's $3,500. You can't charge that money on an $80,000 mortgage. It was illegal. So what lenders did is go, we don't do loans under $100,000. What happened to the low end family got screwed on that. The intention was to prevent predatory lending. But back in the days, back in the 90s and early 2000s, if I had an $80,000 loan, I'd tell the guy, hey, look I got to charge you 6 points to do the loan. But they'd look at it and they go, 6 points on 80,000 is not really that much money. And I could do it. They were happy. I was happy. I could still make a little bit of a profit and they'd get into a home. You can't do that anymore. So now I just have to go, my bottom number is $100,000. I can't do any. And actually today, it's very difficult for a lender to do $100,000 mortgage.
Remember, we did one recently that was around that number, and I remember it being a little trouble. We actually I think we had to bump her up and get her to buy extra, and then told her, as soon as you close, you can just write us a check for 25 grand or whatever. Right? I mean,
it's a little sticky, but it hurt the low end buyer. It was designed to prevent predatory lending, but ended up screwing the low end buyer. So we'll get you more details on the $100,000 FHA transaction in future episodes of this. But I appreciate you joining me. Happy Memorial Weekend. Thanks again for your services. It means so much to us. If you need any help to buy a house, sell a house, looking in any state in the United States, Tom McNamara, EXP, can help you with that. You're looking for a great mortgage, purchase, refinance, home equity line, construction loan, renovation, reverse mortgages. I got a few of those I'm doing these days. Unbelievable. We can help you. We're all direct right here. Bruce Woodburn, the loan arranger. I'd be more than happy to assist each and every one of you. And I promise you'll get personalized service from Tom and I whenever you call us. We look forward to hearing from you next week. Thanks, Tom.
See you, Bruce.